All right, recording's rolling. I appreciate everybody who has joined back for another stream on a Thursday night. We're going to go ahead and get this started today. Like I said, we're going to go ahead and do some direction analysis on Bitcoin, on ETH. We're going to go over last week's GBP NZD play. We're going to talk about the continuation theory today as well. Another emphasis on that, why it is super important in our style of analysis. And then we're going to go over that with USDJPY. And then again, we're going to talk about low win rate plus high RNR. Versus the high win rate plus low R&R type of strategies. What works better for you, right? We're just going to go ahead and explain them so you guys can get an understanding of what you would like to see or have more comfortability in. So let me go ahead and get rid of these, and then we're going to talk about Bitcoin at ETH range first, what we're looking for next, and what we could possibly see coming into next week based off of recent behavior and previous data, what we have currently, and then we will get into what was mentioned before. So looking at, I'm going to go ahead and start off with actually Bitcoin. Looking at Bitcoin, last stream we talked about our redistribution range, why retail was looking for longs over and over again, right down here within discount, within this range, trying to take this higher overall. Institutional candle, whatever they saw, right, trying to take this higher, why they got stopped out of their trades from them believing, right, that price was going to continue to the upside. They see this space and they say, okay, look at all of that profitability to the upside, right? We had a break of structure to the upside, came back down to what started that, so now I want to see higher, right? This is the mentality that they get into, but it's not there yet, right? That structure was not there yet, that demand wasn't shown, everything that you wanted to see was not there as far as longs go, so why are we still longing, right? As far as shorts go, we're still bearish overall. We've seen continuous redistributions coming into this range, but it's starting to get to where we're building a lot of buy side liquidity, right? So this starts to show me some type of accumulative behavior in the discounted range of our overall statement that we have right here. We talked about those monthly equal lows as well that we can see right here with what looks like a drop-based drop coming into these areas. We could easily see these lows swept, as overall we're still bearish, still showing bearish tendencies. We could possibly see some demand introduced once these lows are swept, and then we fill this monthly fair value gap, as well as possibly introduce some type of demand. We're looking for that to be introduced first before we take any longs to the upside. Yes, it would be very, very nice to catch that bottom, right? But it's not there yet, so we need to wait for that to happen. And once that happens, we will catch that bottom, right? It's not worrying about catching that bottom, it's just worrying about that behavior coming into place. You'll still have the same amount of profitability trying to take this to the downside continuously into these lows, right? Based off of your R&R, based off of your strategy, from higher time frames to lower time frames. But as far as longs go, they're still not there quite yet, so I'm not looking for longs to the upside right now. So looking at our range, how we can tell this is occurring, right, is we talked about this redistribution we had where we had an accumulation, right, manipulation of the lows. We left the highs, that buy side liquidity, early shorts getting into trades right here, trying to late shorts after this move to the downside, trying to get into trades, continuously take this to the downside. They said maybe it'll do this over here once it comes down to here, so I'm going to get into shorts. Remember, retail, they don't want to be wrong. The uninformed money, they don't want to be wrong. So the most external point within this lower time frame range, right, the most external point within this higher time frame range that they are looking to extend their stop losses to on a short position to the downside. If one, they tried to take it on this supply zone, maybe they tried to do it some type of smart one way, right? Whatever they're looking at, it doesn't really matter. But the fact is they're getting into shorts and they're trying to continuously take this to the downside. So if we go ahead and place out a short position, right, they could be shorting anywhere within these candlesticks, anywhere. Where is the most external point they are going to place their stop losses, right? Above this high or above these highs overall, right? This is obviously a daily chart, so this is a huge amount of risk on this high right here. So this is your most external high within this range, right? If retail is trying to take shorts to the downside, to continuously take this to the downside, where they're going to place their stop losses. So that draw on liquidity after that break of structure, right? That switch in market structure right here, where we had another redistribution on lower time frames, and then we broke structure to the upside, came down and started to create now a higher low, started to introduce demand, tells us that that draw of liquidity is starting to come to the upside into these highs, right? We now have reason, one, to come into these highs. Why? Because we're looking for that lower high for the continuation downside to fill unmitigated areas of imbalance that pushed price lower before. And two, right, we are seeing the overall draw of liquidity to the lows below here on a bearish scale. But as retail is looking for, they're trying to take shorts to the downside within any time frame, right, whatever it is, and they don't want to be wrong. So where are they placing their stop losses? Right here. And if we play it out, right, that bearish to bullish flip that we had right here from market structure, the higher low creation, the next new high that we had created came down and made another higher low, right? We never breached the lowest low that caused this highest high right here, came back down, created another higher low, continued to the upside into those stop losses, right? So what is retail doing at this point in time? Let's think about it from their psychology. They just got stopped out. Maybe they lost half their port, whatever it is, right? They're now stopped out of their trades, so what are they going to do? They now see these impulsive moves to the upside. They're stopped out of their short trades to the downside, and now they see all of this space to the upside right here. And they say, okay, stop this out right here. Maybe it goes to right here now, right? And they start drawing out all these boxes. And I guarantee you've done this as every retail trader, and everyone is a retail trader unless you trade with the hedge funds, right? But has done is start to just set out boxes, set out zones, and say, okay, maybe it respects this one, and start to short that one, and say, okay, maybe this one, right? And you start to get that gambler's fallacy, that mentality of maybe it'll work this time, where in this game of probabilities, we need multiple probabilities to come together as one confluence, and that will allow us, right, that confidence when entering trades and holding trades. Because now if I'm confident because of multiple probabilities, right, in multiple directions from my entry to then my take profit, then I can hold that trade for much longer with much more confidence than I will just putting out a zone right away because I think it's going to respect it, or vice versa, right? And just entering a trade one way because of one fundamental thing or a trend line break, whatever it is, right? We need multiple things to come into play to enter our trades. So they get into this mentality to where they want to continue to short it, and or now that their zone has been broken, right? They say, okay, support to resistance flip, whatever it is, right? I want to now take this to the upside. So now they start to set their stops, or now they start to get into long positions, right? Setting their stop losses below daily lows now, and that is shown, right, from the equal lows that we can see that are present, right? Trying to take this to the upside, trying to take it to their zones, whatever they have. Maybe they want to take this to the moon, whatever it is, right? They want to take it higher into this range right here. So now we start to see this buildup of the sell side liquidity now that the shorts have been taken out of their trades. So the manipulation is starting to come into place now. Let's play it out. Comes back down again, right? Creates more equal lows. So we can see more people are buying at these lows right here, trying to continue to take this to the upside. All right, the algorithm is starting to generate that liquidity. And then we see another pump to the upside right here. Now that all the buy side liquidity has been taken out, right? So now that people are holding shorts right here, they get taken out of their trades. Maybe there's breakout traders to the upside, right? That set long positions right here at these highs right here. Said I want to take this to the upside. Where's the most external point of the range, right? Where I can place it. Where is it clean? Where does it look like it can't go below? Well, we saw a large impulsive move to the upside right here. Consolidation before that, so they're like demand zone, demand zone. I'm going to place it underneath these lows or these lows right here, right? Remember, it's a daily chart, so these equal lows show a lot of liquidity within that area, right? A lot of liquidity is available within that one area. So now that we have that push to the upside, that is generating liquidity, generating that retail to now get into long positions to the upside, we can see the buildup of that sell side liquidity, right? The equal lows that are being presented, the trend line liquidity, as well as the equal lows we have down here. So now overall, remember, we are still bearish. We have manipulated retail out of shorts and got them into longs, gave the market a reason now to continue to the downside. So we see all the shorts out, right? The supply introduction with the breaker structure to the downside after all the shorts are out of their trades. And then once that supply is introduced, right, we see price respect that and then continue to the downside, seeking that liquidity overall if we play it out, right? Again, when we came into this area, like we had talked about on our last stream, we generated more liquidity, right? They see this large move to the upside and they say lower low, or even right here, right? Lower low, higher high, higher low, continuation. Sorry, higher low, higher high, higher low, continuation to the upside. So they just see a demand zone right here. Maybe they're like, okay, now longs are taken out. I'm going to take this to the upside overall. Technically, it was just sitting in equilibrium within the entire range, right? But was the confirmation there of the continuation to the upside? We have to remember overall we're still bearish. So why are we trying to continuously take longs at these lows if it is not presented yet, right? We need a reason for price to continue to the upside. Right now, all it was doing, right, was giving reasoning for price to continue to the downside right here. I give you guys these manipulations of these ranges and tell you these they are pretty boring, right? It's going to be boring going through this, understanding how these candlesticks move, but then it gets really, really interesting when you're actually in it, right? Because now you can go back and look at old trades and say, oh, I know exactly why I was manipulated out of that, right? I can see that accumulation to then distribution, and I was trying to take a long when instead we were introducing supply, right? There's a distribution to the downside, or vice versa, however you can. But now you have the ability to go back and look at old trades that you have failed and get into that mentality of, okay, I understand what the market is doing, and now that breeds confidence, right? And now you're looking for the same thing, and now you're entering trades, leaving them, letting them hit take profit or stop loss, break evening at the correct times, right? And then you're good to go. So with that being said, as far as the direction analysis goes for where we are at currently, right, we have mitigated this institutional candle that started this move to the upside right here, filled some imbalances as well on the daily chart. Remember, we talked about the monthly liquidity we still have below, so we're still looking for that draw of liquidity into that 17.5 target price that we have down below. We could easily take out these lows down here and still introduce demand on higher time frames. Right now, no impulse has been shown, as well as we can look at the volume. We are starting to increase volume as we are pushing down, right? Creating buy side liquidity. So this is showing again like that accumulative behavior that we were talking about before, but it isn't there yet. So we're still looking for that footprint, that digital footprint in the form of that impulsive move that breaks structure and leaves an imbalance to give us the ability to then enter trades and take these higher into areas of supply overall, right? So with that said, for Bitcoin with our current range, I personally do not like to trade Fridays. I've started to limit myself as far as trades go. I like to have a good 1 to 2 a week ratio. This is not going to be applied to everybody and how they trade, right? Because I'm more of a swing trader. When I get into my positions, I like to hold for longer and I like to hold for overnight, whereas some people don't, which is completely fine, right? The amount of profitability is still available within both strategies. It is about how you use it and how you manage risk that is going to be really important, right? But I personally don't trade Fridays as I feel the volatility is not really present. I believe that it can be manipulated a lot, and that it goes for the same as Monday as well. We see a lot of retail liquidity entering the market right away on openings of the market because they believe the direction will go here and they have to get in, right? They're FOMOing into the trade because they want to be early, whatever it is. But that's why I don't usually trade Mondays, and that's why I don't usually trade Fridays. So I'm not looking for any setups as far as Bitcoin and ETH go into the weekend. But as far as our current range goes, right, we talked about downside, how we are still looking for downside until we are proven wrong, and that is still what is being shown. Right, we had the supply creation from the break structure to the downside. We came up, rated the highs, broke structure to the downside again. What did we do? Came back up into the candle before the candle that broke that structure point to the downside on the H4, respected that area of supply, continued to the downside. We made more internal lows from demand zones that had pushed price higher, right? So we are disproving longs currently, still creating buy side liquidity, liquidating those early shorts, and then continuing to the downside. So we're still showing some type of supply right, introduction as we are creating the liquidity to the downside, still giving reasoning for us to continue to the downside. Market structure has helped myself personally the best with identifying these ranges and understanding the entire liquidity goal, because if we are still showing the manipulation of highs, right, we're taking out the buy side liquidity, but we're still respecting supply and creating that sell side liquidity below, then we can look for that continuation to the downside. We'll go look at ETH. It's going to be a very, very similar story. But right now, still not looking for those longs. But overall, I had shown something that was a little different, right? I had the path out, and I'll explain that path in just a second here. So this is what I had drawn. And I'll explain the reasoning for why I had drawn this right here. This was drawn a while back, 31st of August. So about a week ago, 6-7 days ago. Let's get rid of this volume. And then let's talk about why we had this right here. So when we created this range on ETH, and I like ETH a lot, I talk about ETH a lot, and the reasoning for that is because I believe it shows a little bit, personally believe that it shows a little bit more of the story than Bitcoin does. I believe it's a little bit cleaner as far as its Wyckoff schematics and how it just moves in general. But as far as the ETH story goes and why I'm looking for this, is we are looking for Bitcoin to take out some more shorts, introduce some more supply, and continue to the downside as we were talking before. ETH, very, very similar thing. We do know ETH has more volatility as well, which means it has larger moves. So if I'm looking at ETH right now, let's look at the daily chart, the 2-day chart, and even the 3-day chart, and understand where that supply was introduced within this type of, or within this chart right here, right? So we came up, took out the buy side liquidity. We can see this 3-day chart shows some very clean equal highs as we came up here. We created some more when we came up to this high as well, and then took that buy side liquidity out and then started to continue to the downside farther. We introduced supply after we took the buy side liquidity out and then broke structure to the downside. Always go to your higher time frame charts if you want to see the higher time frame narrative for the story of what you're looking for. Then we can go to the lower time frames, right, to then prove ourselves that narrative. So on the higher time frames, 2-day, 3-day chart, we can see where that break of structure occurred to the downside. Candle before that candle lies at 18.17 to that 19.71 range. Yes, it is large, but obviously I wait for the lower time frame confirmation personally every time, right, once it comes into these areas, to then take this to the downside. But if we look at the range, let's understand why I have this drawn out right here. We introduced supply at these highs right here after we took out the buy side liquidity within premium of our range, and we are starting to create sell side liquidity from an overall bearish trend. But where did we introduce demand up into that buy side liquidity? Down here, we have areas of fair value as well. We have equal lows as well, and we have a low that caused a new high within the range. So we introduced demand down here around 11, let's just say 93. And we introduced supply internally within our range around 1833. This high caused this internal low, right? And this low caused this internal high. So internally within this range, I'm looking for price to travel back into premium of just this impulsive move. Right here, this is all I'm focused on currently, to come up to this area right here that's started that supply, sponsored that supply, take out the buy side liquidity that was present on the 4-hour. We can see that that buy side liquidity is presented right here to us on the 4-hour time frame, right? So a higher time frame holds that higher narrative of buy side liquidity. We can see the trend line liquidity as well. This might be a little unclean, right? But we can see that starting to be built up as we are starting to put in demand on lower time frames. But this will show us that shorts will be out of trades on this move to the upside right here. We'll come back up to an area that introduced supply and broke internal structure to the downside. Or, right, we do another thing. And this is my second option that I am looking for. But if we come up to this area of supply, I'm looking for us to then come down, take out the longs after we took out the shorts. Now that everybody is out of their narrative, we'll go back to the start of what started this entire uptrend, right? Look to mitigate those areas of demand and then look to continue up into areas of supply overall with the overall buy side liquidity that we have for a reversal. Now, for a continuation to the downside, right? On a monthly chart or higher time frame chart, we'll not even look at this right now. We'll just look left, understand what happened over here. We have our move to the upside with impulse. We came down, filled that 50% of that fair value gap, but have not mitigated that candle before that candle that broke that structure point to the upside. So we could see that continuation into those areas of 747 overall, that $800 ETH that everybody is looking for. But currently, I am seeing a lot of demand creation, right? As we are moving within this range, I do believe this is going to be a long chop, a lot of days. We've already seen a ton of days within overall Bitcoin's higher time frame range and ETH's higher time frame range, just creating liquidity both sides, not being very clean, I guess you would say, right? Having an overall trend, just taking liquidity out within both sides, from the buy side liquidity to the sell side liquidity, and so on. But when I look at these charts and draw out these narratives like this, usually the main thing I'm asking myself is where are the early longs and where are the early shorts, where are the late longs and where are the late shorts, right? What that means is I'm waiting for the manipulation of those traders to be taken out of that certain impulsive move for that structural narrative that I have, right? For the overall impulsive move, right? You have your first area that you're looking for. You then look for the imbalance as you're traveling back into that area, and then you look for the confirmation into that of that zone, right? And then you can look to target now that weak high of that narrative or the weak low if this was flipped vice versa, right? But you're looking for this structural narrative. So if I'm looking for this high right here to be created, I'm waiting for price to come up into this zone and lower time frame confirmation of a 4-hour break of structure to the downside with displacement to show me the same exact thing that this structural narrative showed me right here. Once that is shown, I'll be able to enter my trade, right, and then target the structural low as well as the liquidity, trendline liquidity that we can see being built, as well as coming down into areas of demand that sponsored the move overall in this count of the range, right? From an overall bearish perspective, within an area of supply on higher time frames with lower time frame confirmation, right? You can now start to see many, many, many more probabilities come into play than just zone entry, right? It's a lot more than what we think it is, but if we can simplify it, right? Just looking at it as impulsive move, right? Lower high, confirmation, continuation, take it to the weak low, right? You're looking for 1, 2, 3 steps, and that's a lot more simple, right? Even though it is a lot more probabilities that come into play, than just looking at a trend line breakout and saying, I know what I'm looking at. I made this on the last one, right? I was right on the last one, so now I can take this trade to the upside and or the downside. That's just as far as Bitcoin and ETH goes. For this current range that I'm looking in for the lower time frame, so we'll just move to a 4-hour time frame and a 1-hour time frame. Once I get rid of these, we'll hide that. Get rid of this. Rid of this as well. Delete this. And this, if it wants to let me pull it. All right, and then we'll go to our lower time frames. So looking at our lower time frames right now, why did I have this demand zone drawn right here? Why does this make sense? Let's look at our accumulation after we came into this higher time frame demand zone right here. I believe this was a daily demand zone. We had a change of character right here. All it did was push back into this demand zone, and then our next area of demand was created on that impulsive move to the upside, created that imbalance, and then we came down and mitigated that candle before that candle that showed that move to the upside right here. So if I'm looking at my lower time frame range within here, we came down into that range, right, and then showed that break of structure to the upside, created that area of imbalance, came back down into that area of imbalance, mitigated that, created a higher low, and then started to move higher within this lower time frame range right here. We're currently sitting within premium, right, of this lower time frame range from this high to this low right here. So if I just go ahead and draw that out, your most external points of the range, right? Where are we looking at what's being left behind and what's being manipulated more and what is being introduced, right? So we talked about the supply introduction up here, where price came back up, mitigated that area of supply, came back down into this area of demand. What did we do when we mitigated demand? Broke structure to the upside, created a higher low, and then created a higher high internally. We have still not violated these lows that caused internal higher highs, and are still showing the demand introduction on lower time frames. The reason I'm showing the hourly time frame is to show you why this candle made sense right here. All right, so we broke structure to the upside on the 4 hour. What puts in your 4 hour break of structure to the upside, right? What confirms that trend on lower time frames? Next your 1 hour, right? So we're waiting for the 1 hour break of structure to the upside. You can see your 1 hour is bearish on this move to the downside right here, right? And then where do we switch bullish? Well, we have our redistribution, so we know that there's a high and a low right here on the hourly time frame from this drop-based drop that we can see that is being presented to us right here. Candle before that candle that broke structure to the upside is presented to us right here. We came close to it, very close to it, and then came up and created new highs overall, right? What does that show me right here? Inducement into these areas. So this first move was maybe limit orders or people who are just entering this based off of whatever it was before this zone was mitigated. So now that we saw this large move to the downside right here, right, they're now all trying to get into short trades. Whereas we're just going to these areas, mitigating demand that caused that internal break of structure to the upside, and now we're seeing more breaks of structures to the upside, right, on this range high right here. But let's understand what we're looking at within this price action right here. On our 4 hour time frame, we can see that we came up into these areas, right? So we're still within premium of this range right here. We are leaving some lows from this trendline liquidity that is being built up, as well as that overall trendline liquidity that I was showing to us right here. So we are squeezing, right? This means a big move is going to be coming either way. So we're just waiting for that break of structure with impulse and with volume. Technically, you don't need to use volume, right? But volume just shows us a little bit more of a visual representation of that algorithmic liquidity coming into the market. But which way, once that occurs, right? So either the shorts are taken out of their trades first, and then we get that displacement to the downside after mitigation of areas that sponsored that, or the opposite, where we take out the longs, right? Continue to push down into areas, take out more longs, right? Continue to push down into areas of demand that sponsored the entire breakout of the range right here, and then we start to see that demand introduction, so then we can take those trades to the upside. But as far as current price action, like I said, I'm not looking for any trades coming into the weekend. So I want to look for an impulsive move that either creates a new high or a new low and leaves that imbalance. Once that is shown, then I can look to take a trade, right? So that's what I'm just showing to you guys for how you guys can look for a possible trade to get into, right? But as far as this internal range goes, we are still respecting demand, right? But we are creating a lot of buy side liquidity, so we could still see that push up into that area of supply that first sponsored that internal break of structure to the downside here, and then we could see continuation into these areas of demand. Or we could see an introduction of demand on a large push to the upside right here, and then a reaccumulation within these areas. So we have a distribution to then accumulation, and we continue higher into areas of buy side liquidity as well as supply that we have here as we are respecting those lows, right? So you can't call these lows being taken out overall, but if that structure is shown to us, right? If we come up into these areas and then introduce supply, break structure to the downside, then we'll see that move into those lows as well as that area of demand. So that's how we can use that structural narrative to then look for a play to get into. So that was Bitcoin and ETH. Coming into the weekend, I will be posting sentiments as well as entries and exits as they come to play. But right now, I'm not seeing anything that is catching my eye as far as trade to go. But I'm going to go ahead and look at next GBP NZD, the play that we had last week, why I was able to catch it, why I even wanted to get into it, right, and how you could look to catch it yourself. So understanding why this happened, why this trade was taken, is going to come from a market structure to Wyckoff perspective, and we'll look at the trade, where it went to, right? Why it went to where it went to, and why I ended up taking profits at certain areas. Because I ended up taking profits actually when we came into this area of supply that caused this new low right here. But we'll talk about why in a second here. So on my higher time frames, overall I've been bearish on GBP NZD for months now, a couple months now, ever since this area right here, where we took out the buy side liquidity, broke structure to the downside here, and we started to create that area of supply, looking to take it into the overall lows of the monthly time frame. If we'll look at the monthly time frame real quick, we can still see that bearish narrative that we're creating, where we move to the upside right here, broke structure to the downside of a low that caused a new high, continued to break structure to the downside, took out shorts, right, and then broke structure to the downside. Again, we're still showing that supply introduction, and then we have the lows that we are creating as well. I believe 70 to 80% is still net long on this pair, which is still creating reasoning for us to continue to the downside with our structural narrative as well. Right. I'm gonna go ahead and look at crypto chat 1 second. Frizz was saying, "Yo, what's up, brother?" But looking at our GBP NZD play, right, we'll look at the structural narrative, how I was able to catch a counter trend long, right? So, on my daily time frame, we're within this area where we came up, created a lower high, and started to go lower. So we're ranging right now, right? It's not very, very super clean price action as far as a trend goes. Just up and down within this range right here where the trade was taken and why it was taken. So as you can see, we had this move to the upside right here. Let's go on our lower time frames. A 4-hour time frame where we broke structure to the upside. You can see that was right here. Your area of demand as well. You can see we came into that, absorbed that perfectly, created new demand, started to move higher. But let's understand our range right here. So we came up, right? Took out that buy side liquidity, introduced supply, and then started to move lower. Now, that was within this area, right, that I was looking for a trade to the upside into this area of supply. So if I go ahead and put on replay mode, just put it up like this, I was looking for that retracement into that area of supply that had caused this first breakdown right here. So then I could take it into the lows right here, right, into that area of demand overall. And where can I look to now enter that? So with that narrative being put in place overall, where I'm looking for price to come into that area of supply that sponsored the breakdown, right, and then looking to take it into that area of demand, so then I can either, one, look for something like this, or look for price to respect that area of supply that was created and then continue to the downside. Right, now that I have that narrative in play, I can look for what is coming up with that, right? The clues coming up into that, so that I can enter my trade. So now I'm looking for that long if structure shows that mentality to take to the upside into this area of supply, so then I can short it overall, right, into this area of demand. So we can start to now take multiple trades instead of just waiting for this one setup, because what if I miss this setup, right? That's just my personal outlook on it. Obviously, if you miss it, you miss it. You got to let it go, right? But if I am looking at a higher time frame setup on a 4-hour or a daily chart, and I am a swing trader, right, if it is not coming to play yet, but I have a narrative that is being set up for myself, I now have more opportunity coming into play, right, as that narrative is falling into place as well. So let's go in our lower time frames now, look where this trade was taken, and look for why it was taken at this point in time. So on my lower time frames, I had swept these lows right here, meaning I could possibly introduce demand right after we swept lows right here, mitigated this area of demand that caused a new high, and see that push up into this area of supply right here. So I was waiting for an 15-minute breaker structure to the upside to indicate my hourly pullback up into my 4-hour breakdown, right? So I was looking for that demand introduction within this range right here. I had seen one break to the upside, one move to the upside right here, and I was looking for another as well to show that demand introduction, that double market structure break, that W, that market maker M's and W's that we're looking for, right? Accumulation and distribution. It's all the same thing, just a bunch of different names that you see everywhere, right, online for it. But let's understand what we're looking at right here. What I was looking for, the delivery into the equal highs, into the area of supply, right? And what is that going to do? Take out all the shorts, mitigate that area of supply, and now give us reason to continue to the downside. So if that narrative is in place, then I can look to take this trade to the upside. Let's go ahead and play this out a little bit. right? We come back down into that first area of demand after we broke structure to the upside on the 15-minute right here, and then we break that area again. So I now have my next area of demand within this candle before candle right here to look for price to take to the upside. I believe this was taken on the 5-minute chart. We'll see as we come into these areas. But now that I have that 15-minute, I'm waiting for the 5 to do the same exact thing. We come down, take out these lows right here. Right, I'm still looking for my 5-minute price action to show that impulsive move that breaks structure to the upside. We get a move to the upside right here, right, and I'm looking for the next demand introduction. So again, another W from now the 5-minute to the 15-minute to the 5-minute time frame. We get that break to the upside right here. I'm now looking for my trade entry. I think this was actually taken on the 2 to 1 minute time frame right here, a little bit more to the right. As this came into play, yes, we broke structure to the upside right here. On this move, on this impulsive candle, I now have my area of entry. On the candle before that candle, right, we can see the move was up right here. We're looking for the next area of entry as price comes down into these lows right here. We get entered in our trade right there, and now we're looking for that delivery up into that area of buy-side liquidity. I have areas of supply as well. Now let's talk about why I took profits at this area of supply and not this area of buy-side liquidity overall, right? Because I had my one setup, okay, so we have our counter trend long. We're looking for the lower high up here. But we have to remember, we had an accumulation to distribution right here. So we actually introduced supply on this move to the downside right here. So price could easily respect that and then continue into areas of demand lower. Or it could respect that and do whatever it wants to do, right? Continue to areas lower right here and then introduce demand from this low that caused this high, right? Whatever it is, whatever that price action is going to happen, we need to wait for that to show before we start to enter our trades. So I understand that I have an area of supply. I understand that I have an area of demand overall I'm looking for. And I understand I have an area of supply overall I'm looking for. But I can't reach this area of supply until these highs are broken right here, right? And that introduction of demand is actually shown. So we could easily respect this area of supply and continue to the downside and create more demand, which is exactly what we ended up doing. I believe our first take profit was at these areas of buy-side liquidity right here at 109.23, right? For the continuation higher from our distribution to then accumulation, demand creation that we had occurred. You can see the lows are being manipulated, highs are being held. Once that trade was entered from the 1 to the 15 to the 5 to the 2, right, within a 4-hour range, we are looking for that move up into those highs. Let's go ahead and watch this and see how it ended up playing out. Came back down, created a higher low, and then started to move higher, right, into those areas of buy-side liquidity and into those areas of supply. And then once it was at that area of supply, I said, all right, I believe we're at a 1 to 8 or something similar. Yeah, 1 to 8. So I'm going to go ahead and take some more profits right here, right, as we could easily respect this area of supply and continue to the downside. Remember, overall, we are still looking for that delivery into that buy-side liquidity, but from what is being shown right here, this is my most feasible take profit, right, at this point in time up into this area of supply. So let's bring this back up and then let's watch what happens. Right, so we had break even. After that new high was taken right here, higher low was created, continuation to the upside, and then we had an accumulation to then distribution right here. We took out the highs. You can see we broke structure to the downside as well. And let's go to the back to the 15 actually. Get rid of this nasty price action right here. Let's get rid of this. Let's look at this right here. You can see we broke structure to the downside once, twice, came into this candle before candle that broke this structure point right here and started to move lower. We're stopped at a break even. That's completely fine, right? Our narrative was set for that play. It was counter trend, so we took it profit at respectful areas, right? At feasible areas, even though overall, right, we are still looking for that delivery to the upside. So let's watch what happens right here. We come back down into this lower low right here. We take out a bunch of longs, and then we break structure and start to continue to the upside. Come back down to that candle before candle that broke structure, And then look at that. Now we have that delivery into that buy side liquidity that we were looking for. So with our structural narrative that we had right here, we were still able to enter a trade, and we were still able to catch a lot of profit, right? I believe I booked 3.4% on the port with this move to the upside, right? With this counter trend narrative that we had right here. Even though it didn't break that structure point to the upside and go into those areas of buy side liquidity, I was still able to gain profitability from this trade, right? So now you can see how we don't have to catch this. I didn't even have to actually catch the move to the upside, right? That I was actually looking for on this move right here. Instead, we were able to catch this counter trend move to the upside and still gain profitability, right? On this move here, because we were able to take profit at respectful zones, at feasible zones. So we're not looking to take profit at the higher time frame zone, even though that is what we want, right? It's not there yet. So technically I cannot be taking profit on that move to the upside yet. I need to take it at respectful areas, like the area right here from this candle before candle that broke structure to the downside with displacement from an accumulation to distribution from an overall bearish market that we have, right? So we could easily continue to the downside unless that narrative is being shown. I didn't catch this move to the upside, but I still booked 3.4% on the port, right? This is how we can start to now understand that we don't have to catch higher time frame moves. We don't have to catch the entire move. I don't have to be at the charts 24/7 because I don't need this, right? I don't FOMO into trades now because I don't have to be in, right? It's going to eliminate multiple factors that have you at the charts when you're not supposed to be at the charts, or have you making up certain stories when you're not supposed to be making up certain stories, because it's just not there, right? That narrative isn't there. What's being shown, what you need, is not coming into play, so the market is not going to move, right? Realistically, that is how it is as far as the liquidity buildup goes. But we can see how we're still able to gain profitability on that counter trend move to the upside. We still came down and the move still occurred, right? It still happened on this move to the upside right here, and it still could have been caught, right? I unfortunately was not on the charts at this time when it moved up into these areas right here, but it still could have been caught. Now that my narrative was disproved right here, but we still held that low that caused a high and then introduced demand, right? Broke structure twice, candle before that candle, came back right back down into that, delivered into it perfectly, right? Broke structure to the upside, came back into that candle before candle, and then started to push higher into our areas right here, right? I now can wait for that next trade to come into play. Now that I still have my narrative and it is still being shown to me, right? All the market wanted to do at this point in time, right? All the market wanted to do at this point in time was mitigate this area of supply and take out more longs before it wanted to push higher and take out the shorts, right? That is all it is. But because we are understanding that this was the most recent high that caused this most recent low right here, then we can look for the continuous delivery. What happened, right? Just from a market structure perspective, this high caused this low. We came up, created a lower high. We're looking for a lower low, right? Do we create a lower low? No, we don't, right? So now what does that tell me? This high is a weak high, right? This didn't do its job, so now this high can easily be taken out. How can that be proven? Break a structure to the upside right here. How can that be proven a second time, right? Double break a structure to the upside right here. Where's your candle before? The candle that had that double break a structure to the upside right there, right? We come back down, create a higher low. How can I confirm that with my lower time frame break a structure to the upside? Where does that happen? Right there, right? Now I have my area of demand. Now I have the delivery into my actual goal that I wanted overall, right? Just from a market structure perspective, we can see that this low that caused this internal high was still held. So that was held as a strong low. This high did not cause a new low. So we saw the continuation into that weak high overall. So I still now have a trade into my buy side liquidity goal that I had before. I now have two areas of opportunity that I can get into trades on this move to the upside from one general idea, from one general narrative that I'm trying to get into play, right? And now let's look at this as well. Where's my opportunity to the downside on this move? Well, we saw the push up into this area. It respected that, broke structure to the downside, right? I have a short position into areas of sell side liquidity that I have available right here as well. If I bring it back like this. Right, we look for the deliverance up into this area right here, and then we see that break of structure to the downside right here. We look for that candle, we look for the confirmation of that, and we now have a short position, right, either within here or on more confirmation to the downside, right, with stops over here or lower time frame highs right here into areas of sell side liquidity below. We still have that amount of profitability, and then you have your next supply zone, right? Next low is taken out, next supply zone is being held right here. This is just on replay mode. I'm going to go ahead and get rid of these lines so we can look at this from a clear perspective. But you have your next supply zone, so if I'm on replay mode, I bring it back right here. Right, you're like, I'm trying to take this to the downside. I might look for a trade on this move right here, right? Let's look for price to respect that on lower time frames. What does it do? It takes that out. So now I'm disproved on my theory to the downside, right? And this higher low that caused this internal high is still being held. We look for now the demand introduction to be proven, right? To show that demand is now introduced within this trade or within this time. We see that demand introduction on that move to the upside right there. I'm now presented with an opportunity now that I'm disproved on my move to the downside. Right, I'm disproved on this move to the downside right here, even though I still had that pleasurable opportunity come into play on this break of structure as well as the supply introduction internally, right? And then we're looking for the delivery into this area and the confirmation of that to take it into that buy side liquidity. Now that I'm disproved, right, we come into that area, we see that break of structure with impulse, we look for the candle before that candle to then enter that trade. Candle before candle is mitigated perfectly, and now have that delivery up into that buy side liquidity. So because I had one narrative overall, and then we see we had the break of structure and then the overall delivery into this demand zone that we have right here. But if we're just looking at this, I now have much more profitability opportunity that comes into play, right? Even though I didn't need to know what the entire narrative was, right? All I was looking for was this low to this high right here. And I was now presented with 1, 2, 3 opportunities versus just this low to this high right here. If I had held right here, or on this move right here and went through all this drawdown up until this low, right, you're not looking at the same amount of R&R or the same area of time efficiency that you would want. This is your 1.4 to 1, right? Just up into this high right here. Yes, that offers 1.41% possibly on the portfolio, right? But are you wanting to hold for that amount of time, which is, right, and let's just bring this out just to show it visually, right? A day and 4 hours versus the amount of profitability that you could have had within that, right? You could have still gotten a 7 to 1, 8 to 1, and then a 6 to 1, even though you were just looking for the one 7 to 1, right? You now have literally double that available, triple that available within just this one range, because you now have a narrative and you can now learn as well as price is starting to show this price action movement occurring, right? So that's just what I wanted to show for GBPD NZD, why it came into play, why I was able to take that trade. Very, very, very quickly, we'll talk about continuation and we'll talk about USD JPY as we've been talking about it for a while. For the continuous delivery to the upside, we'll just go back and look for the same exact thing. Continuation plus disapproval, why I love it so much, right? But same exact thing over here. We saw the market maker M that we had this move to the downside right here that had occurred. If we go ahead and draw what sponsored that, right, this supply zone that we had right here, we can go ahead and draw it out like that. And what did we do? We violated that supply zone immediately. So what does that tell me, right? Reaccumulation is most likely going to occur, and we're going to continue to the upside. So we violate the supply zone, create a lower low, right? And then we create a higher high. So we now introduce supply. What do? Come back down to this area that sponsored that, right? And continue to the upside overall. So retail is constantly trying to short this over and over again because what did they see? Right? They just see all of this imbalance to the downside and they're like, liquidity, equal lows, equal lows, equal lows, right? Imbalance. We have to come down there and get that before we continue to the upside. Or they're saying we have to come down there and get all of that and just continue to the downside, whatever it is, right? They're saying we have to do this. But that demand is still being introduced, right? It is still being shown, and it is most likely going to continue overall into higher time frame areas. Let me delete this. Apologies. But into those higher time frame areas of supply, as we can see, this is a monthly chart. I could even go on we'll hide these real quick. And I could even go on a 5-month chart or something even higher and show you, right, that accumulation after we swept the lows, broke structure to the upside, broke structure again, introduced demand, reaccumulated again, broke structure to the upside. We're going to continue, right, to show that push into those areas of supply, into the buy side liquidity, now that we have that bullish narrative. And we're not looking for shorts overall, even though, right, this is very tasty. These lows are very tasty. It looks good, right? There's imbalance right here. It has to come down here before it continues higher. It does not have to do that. As long as that structural narrative is still being shown, it will still continue into that liquidity goal that it had before. So that was just quickly USD JPY. We go over it a lot, and I always talk about it a lot, about continuing to the upside. We've been talking about it for a couple months now, on how it's going to just continue to push to the upside and continue to take out buy side liquidity. You can go look on the MyFX thing, and it'll show you that 90 or 78% is still net short on this coin or pair, trying to take this to the downside. It just proves, right, that reasoning for price to continue to the upside with the bullish narrative that we have. More confluence is coming into play, right? So with that being said, that was USD JPY. And then for the last 5 to 10 minutes or so, we're going to go over high win rate, low R&R. Real quick, versus low win rate and high R&R one more time to anybody who had not understood what it was, or just to understand how the smart money concept, traders can use it to their advantage or not, right? Because you could use both low win rate and high R&R, low win rate plus high R&R versus that high win rate plus low R&R type of mentality and strategy when using these smart money concepts. But understanding what they are, so if I go ahead and just draw them out right now. What's up, brother? Oh, today? Dude, they look nasty out. Oh, right now? Oh, let us go look. Oh, this was nasty. I remember this. Okay. Oh, that's nutty. Oh, that's nutty. Yeah, on ES1. That's nasty. I don't think so. Or I think I can if I look at the stream. I think I have to watch it myself, but it doesn't show up like on the charts or anything. That'd be funny if it did. Nah, I think it's only through Discord. Now that gap up looks nasty though. I think we do take out a lot of shorts. I like that actually. I like that a lot. Yeah, I'm seeing similar. I want US5 or US30 to do something similar as well. Come back up into these areas, come back down, take out the longs, mitigate demand, and then actually make its move. Yeah, that's clean. I really like how that's being set up. But yeah, we'll go back real quick. I believe we were on USDJPY when we had it. Actually, it doesn't even matter because I just started typing it out, so we'll type it again. But low win rate plus high R&R versus high win rate paired with that low R&R. draw this out as well. All right, so personally, I like the low win rate plus high R&R type of approach to it. Others like the high win rate plus low R&R type of approach to it. Both can be very, very profitable depending on how you choose to apply it to your style of analysis, to your style of trading. But personally, I like this low win rate, high R&R, and there will be a reason for it, and I will explain that reason. What that reason is, right, as far as that low win rate and high R&R goes, is the fact that now that I have a lower win rate, right, and a higher R&R, so I have the ability to make more within less time. I don't need to be right as many times. So my low win rate is reflected, right, with that mentality that I don't need to be right every single time. To whereas with a higher win rate plus low R&R mentality, I do have to be right much more than I do have to be wrong, as I can blow my account much quicker with this type of mentality. And let's talk about what this means to me personally, right, as far as what the P&L would look like. And I drew this on another stream, but I'm going to go ahead and draw it again. But for a low win rate plus high R&R type of look for it, you're focusing on small losses and big wins, okay? So how is this going to look like as far as this goes? If you have a big win, right, you still have that first push. Let's go ahead and say you have a losing streak, right? Small loss, you lose again, right? Another small loss. You lose again, right? Another small loss. You lose one more time, right? Another small loss. That's 4 or 5 losses. And then you have another big win, right? That completely blows those 4 or 5 losses out of the water. Let's do the same thing. Small loss, right? Small loss, and then you have a big win. You have one small loss, and you have another big win. Maybe you have 2 big wins in a row, right? So now you're exponentially starting to grow your portfolio with this low win rate plus high R&R type of approach to it, because I don't need to be right every single time. Whereas with this high win rate plus low R&R type of approach to it, right? I'm right one time, right? You gained 1 R or 2 R on your trade. You gained 2 R on your trade again. You're stopped out of 1 R, right? So now you're at 50% where you were before, right? Let's think about it again, right? You win 1 in a row, you now lose 3 in a row. 1, 2, 3, right? And now you're negative overall. Over here, I could lose 5 to 6, and that 1 win will take me out of the water. Here, if I go on a losing streak, that could be catastrophic for my portfolio, right? That is why I look to take the low win rate plus high R&R type of approach versus that high win rate plus low R&R approach. This can be profitable, but this just means you have to be right more than you do have to be wrong, right? And as far as the approach goes, I'm not looking to be right. I'm just looking to catch the move, and I'm looking to be profitable, right? Catch that lower time frame move from that impulsive structure break and the structural liquidity setup that I have presented to myself. But over here on this side, right, again, you could have 1 win, 2 win, 3 wins in a row, right? You have plus 3R on your account. You lose once, right? You lose twice, you lose 3 times, and that puts you exactly where you started over here. Over here, you have 1 win, you lose once, you lose twice, you lose 3 times, you lose 4 times, 5 times, you have another win. It almost brings you back to where you were before, right? You lose once, you lose twice, you have another win, and now you can start to see that difference, whereas over here, right, it seems like you're falling and always trying to get back to that break even as far as that higher win rate and low R&R goes. Both can be profitable, but that high win rate and low R&R is going to mean that you have to be right more than it is on this other side over here. So I don't need to be right as much on the low win rate plus high R&R, and that's why I look to take those trades more than I do this high win rate plus low R&R type of scenario. Because as you can see on that GBP NZD play that we had, that ended up running to that 1 to 8 R&R, right? I didn't need to be right on that move from that demand zone up into that area of buy side liquidity, even though I was, right? And even though it technically happened after we entered, I was still able to gain profitability, right? And we still had those 2 to 3 areas that we could have entered on both longs and shorts to the downside to then take our trades and still gain profitability on our account, even though I wasn't technically right? So now we can see why I like this more than I do this personally. But with that being said, as is there any questions or anything like that that you guys have? Feel free to unmute yourselves or ask me in chat. If not, that is completely fine as well. This will be this was recorded and will be posted to YouTube following completion. I'm going to go ahead and edit it after the end right here. But with new plays that are coming out for the week or coming into next week, like I said with ETH and Bitcoin, I'm not going to be looking to open any new positions anytime soon. I am a swing trader, more of a swing trader. I don't like to open anything on Fridays, especially holding into weekends or anything like that. I appreciate everybody who had joined, everybody who had sat down, listened to me ramble. The fact that you are here already shows that you are literally above 90% of the market, right? Because they literally can't even sit through and watch most of the 10 to 20-minute YouTube videos that they have available to themselves, right? They would rather just be right and they would rather make money. But instead, you guys are here getting that education in, and for that, I applaud you. So, with that being said, thank you all again. I hope you guys have a great rest of your day or night. I will catch you guys later. Entries and exits will be posted, and I will see you all. Peace out, guys. Of course, brother, of course.